Welcome. Thinking of giving a loved one a large cash gift here in the UK? It's a wonderful thought, but it often comes with a nagging question. Will the taxman find out? Well, you've come to the right place. In this guide, developed by the experts at My Tax Accountant, we are going to walk you through everything you need to know. Right, let's kick things off with a scenario. Imagine this. A life-changing £40,000 lands in your bank account from a family member to help you buy your first home. It's amazing. But deep down, you're probably wondering, does this trigger some kind of automatic alert at HMRC? Let's dive in.
Okay, so the simple answer is no. There is no big red button that flashes at HMRC every time a large gift is made. But, and this is a really big but, that is definitely not the whole story. You see, the real issue isn't the gift itself, but the digital trail it can leave behind. And HMRC has some incredibly powerful ways of seeing your complete financial picture.
So if there's no direct alert system, how on earth could HMRC find out? Well, it all comes down to data. Think of it as a huge digital jigsaw puzzle. HMRC has this incredibly sophisticated system called Connect. It's a massive data matching tool that pulls together billions, literally billions of pieces of information from all over the place. We're talking banks, employers, government agencies, and even digital platforms like Airbnb or eBay. A large, unexplained cash deposit into your account? That's like a puzzle piece that just doesn't fit the picture your tax return is painted. So what are the things that actually trigger an investigation? Well, HMRC rarely investigates at random. They follow the data. They look for red flags, things like a big difference between your lifestyle and your declared income, or large unexplained sums of cash appearing in your account. Stay with me. The next point might surprise you, because it's not all about being watched. Now, let's get to the good news. Honestly, there's a lot of it. The UK tax system actually gives you several, quite generous, allowances that let you gift money completely tax-free. Knowing these rules is the absolute key to putting you in control. First up, we have the annual exemption. This is your main one. Every single tax year, you can give away a total of £3,000 without it having any inheritance tax implications at all. It's just not added to the value of your estate. Simple as that. And here's a fantastic little pro tip that many people miss. If you didn't use your £3,000 allowance last year, you can carry it forward for 1 year. Just one, mind you. But that means you could potentially gift a lump sum of £6,000 in one go, completely tax-free. It's a really powerful tool for planning. Then there's the small gifts allowance. This one's pretty straightforward. You can give as many gifts as you like, of up to £250 per person each tax year. The only catch is you can't have used another allowance, like the annual one, on that same person. Getting married? Well, there are special rules for that too. The allowances for wedding or civil ceremony gifts are actually very generous. A parent, for example, can gift up to £5,000. A grandparent can give £2,500, and pretty much anyone else can gift £1,000, all completely outside of the normal tax rules. So, just to recap, you've got your annual exemption, small gifts, special wedding gifts, and there's even one for regular gifts out of your income. It's a great toolkit for tax-free gifting. But that's not all. Here's where most people go wrong, and it's when the gifts get bigger. So what happens with those gifts that are way bigger than the annual allowances? You know, like that £40,000 house deposit we started with? This is where the single most important and probably the most misunderstood rule in gifting comes into play. It's called a potentially exempt transfer, or a PET for short. What this means, in simple terms, is that when you make a large gift, a 7-year clock starts ticking. If the person who gave the gift survives for those 7 years, poof, the gift becomes completely exempt from inheritance tax. This timeline really shows you how that risk reduces over time. If the person who gave the gift passes away within the first 3 years, that gift is taxed at the full 40%. But after year 3, the potential tax bill starts to shrink. Now pay very close attention to this next part. It's where almost all the confusion around gift tax happens. This is called taper relief. As you can see, the tax rate gradually tapers down from year 3 to year 7. But here is the absolutely crucial point that catches so many people out. The person who is usually liable for this tax bill is the person who received the gift, not the estate of the person who passed away. Imagine getting an unexpected tax bill for thousands of pounds years after you received the money. Okay, so we've established that HMRC isn't directly monitoring your bank for gifts. But where do these gifts actually leave footprints and become visible? Let's go back to our most common example. Let's meet Aisha. She's a freelance designer living in London. and she's over the moon because her parents have just given her £40,000 for a deposit on her first flat. Now, that gift is a pet, so that 7-year clock has started ticking. But the paper trail for this money begins the second she applies for a mortgage. You see, the process of buying a property creates a clear, documented, and totally unavoidable paper trail. First, Aisha has to declare the gift to her mortgage lender. They need to know where every penny is coming from. Then, her parents have to sign a formal letter. And finally, her solicitor will do anti-money laundering checks, which means they'll need to see her parents' bank statements to prove the source of the funds. Trying to hide it isn't just a bad idea, it's mortgage fraud.
Now, what's really interesting here is how a simple piece of paper can save you from massive headaches down the line. A deed of gift letter is your best friend. It's just a straightforward document that provides official proof that the money was a genuine gift with no strings attached, which is exactly what lenders and solicitors need to see. And you know, the visibility isn't just about buying a house. The financial system has multiple checks and balances. For instance, when someone passes away, the executors of their will are legally required to declare all significant gifts made in the 7 years before their death. So the crucial point is, one way or another, these gifts can and do come to light.
Let's move on and see how this all builds up. By understanding the rules and the risks, you can make sure your generosity truly helps your loved ones without creating any unexpected problems for them in the future. Following these steps is just common sense, really, but it provides so much clarity and protection. Keep good records. Use your tax-free allowances every year. If you don't use them, you lose them. And just communicate. That last point about a declaration of trust is so important, especially for unmarried couples, to protect that gifted money if the relationship breaks down. Okay, we've covered a lot of ground today, from the tax-free allowances all the way through to that crucial 7-year rule. But, tax law is complex, and of course, everyone's financial situation is completely unique. And for that exact reason, it's absolutely essential to remember that this has all been general guidance. To make the best decisions for you and your family, you really do need advice that is tailored specifically to your personal circumstances. So, whether you're starting to think about your estate planning or you just want to help your family in the most effective and tax-efficient way possible, getting professional advice is the smart next step. The experts at My Tax Accountant live and breathe this stuff. The team at My Tax Accountant is ready to help. You can give them a call on 0208 570 8531, or you can drop them an email. And of course, to make sure you get more simple breakdowns of complex tax topics just like this one, don't forget to subscribe to the channel. We'll leave you with that thought to ponder. Now that you know the rules, how could you use them to help build a better future for your family? Thank you so much for watching.